Glad to have you join us. This is Business 24 coming to you live from IBrand TV studios here in Lagos, Nigeria's commercial capital. So it's time to take a look at the market. Of course, the market closed 2021 in a positive territory, but we'll be looking at some of the factors that drove the market to a positive end in 2021. Of course, the earnings season is here, and the reports are beginning to trickle in. So let's get started right away from the Nigerian Stock Exchange. All share index closed the year 2021 with about 6.07% gain. The all share index in the beginning of the year opened with about 4,270.7 and closed with 42,716.4 points at the close of trading December, representing 6.07% gain year to date. So, of course, we've seen about a total of 72 stock post year to date gain, while about 55 posted losses all year round, and the rest went flat with no gains or about losses. But let's talk about what drove the market now. Mr. Ambrose Omordion, our Chief Research Officer, Investor Consulting Limited, is here with me. Joins me live here in the studio. Thank you for joining us, Mr. Ambrose.
Thanks for having me.
And Happy New Year. We spoke to you earlier and trying to analyze the market and what drove the market, but you're here live now. Let's look at some of the market movers, growth drivers in the capital market in 2021. Let's get started from there before we get into the earnings.
Yeah, I think that the factors that shape the market for the year, I think that yes, investors are used to. Now the mixed sentiment in the market and this performance, there's a lot of factors that are impacting the market negative and those that are impacting the market positive. The first half of the year, the market was on the downtrend, and the second half of the year, the market was up. That is that investors' psyche, or I call it investors' vibe, has also changed within the trend. And don't forget that every first quarter of the year is where we have the peak earnings season in Nigeria, because most of the companies listed on the exchange have December as year end. Then in the first quarter, you saw that more results will be hit in the market, coming with reward in terms of dividend or bonuses for the year. And you saw that in that first quarter of 2021, market had a mixed performance, because in the first month of January, we saw a spike in terms of market performance, and that was as a result of an unaudited account that came for December, the last quarter of the year ended the result. And when you see those unaudited accounts, it gives investors an insight what to pay for the full year when the audited.
I'm going to continue. We're going to continue from there. I know we have a lot to look at, but let's quickly go on a short break. We'll be back to talk more. Please stay with us.
Swift Dry Cleaners Limited, professional dry cleaners, best in dry cleaning and laundry services, and meets the needs of our consumers. Yeah, Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Yeah, for clean wash and quick delivery. Yeah, Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. For clean wash and quick delivery. Ooh.
Swift Dry Cleaners. Clean wash, quick delivery.
Mama.
Glad to have you back now. It's Business 24 coming to you live from IBrand TV studios. Yeah, so let's continue from, you were about to learn on some of the factors, that we saw, some of the sentiments that played out in 2021 as regards the performance of the market. Maybe I should allow you to learn on that.
Yeah, actually. As I was saying that the first month of the year was up, as a result of company released their unaudited account for the financial year ended 2020, and that also saw the last quarter result coming in that direction. People seeing unaudited account, that numbers give them insight of what they should expect from this company. You see, that was the month of January was up. But in February, there was a lot of changes in terms of policy. Then CBN also in the month of February, jack up interest rate in terms of yield, moving from about 1.5 to about 9%. Automatically, funds are looking for where there is low risk and return. Funds started leaving the capital market then, which is in January. That's why we saw February and March was on the downside. But in April, because of the earning season, market tried to adjust upward. In May, it went down. But in the month of June, which was the mid-month, the half year, we saw a reversal, which took the market up to ending 6.07, which is good. That means the market in a straight 2 years have been on a positive terrain, which is good for the market. But we'll now give insight of what is expected in the new year. But don't forget that
just before you get into the new year.
Sorry, don't forget that in the last year, 2020, not only earnings that drove the market, but other sentiments in terms of CBN policy, their policy making, and also the economic recovery. When you see that we're seeing positive numbers from the economy, despite people are saying that, these numbers are not reflecting reality in the economy. But I'll tell you, as an investor, this economic data gives an insight what's expected. That's why when we saw growth in our first quarter GDP, second quarter, third quarter, there are some sectors that drove those figures we saw as a GDP growth. And that gives an insight that those sectors is where there's activities, especially the one is that real sector. You saw results that emanated from Presco and Okomu and livestock. These results were beat market expectation. We now move also to the industrial sector. Also numbers came out. Then the most important is the telecom companies, which is now becoming the insane in the market now, because every economy globally are going digital. Because if you want to run your digital economy, you need data to do that. And which we see activities in MTN and Airtel. They know that now that this has come to be, MTN before the end of the year, they went to the market to do offer for sale. That offer for sale tells that they really want to reduce their holding in the market so that little investor will have more to play around. And not only that, also within that last year, you see that MTN was one of the big bidder for the 5G. At the same time, CBN approved
which of course they granted that.
At the same time, also within that last year, CBN granted MTN what we call payment banking service bank. Tells that there is cash flow for this company going to the new year. But for me, that sector has given us that if we're going to remain on a digital economy here in Nigeria and globally, that means that sector is going to support our economy. If as we speak now, if actually also government is going to increase fuel in 2022, more people will try to work from their home. That means they will demand for more data. That's going to also because if there is hike in the transportation, that also reduce people being on the road. That means people will work more from their house. That is that it gives an insight that what you expect from that telecom industry in the new year. I believe that what happened in 2021 for me is just a mixed market that have given us insight. But we believe that because of expected policy change in 2022, because of government will do a lot of adjustment in their policies. That means investors should not be panicking at this time. Rather, sit down and see how the category from uncertainty, take opportunities there and invest wisely. For me, in the year 2022 is just starting and there's a lot of opportunity for designing investors. When I say designing investor again, not just ordinary investors. Those that sit down, that have knowledge of the market, that also go for information, will make money in 2022. But I see that there are some sectors that are going to drive the market in 2022.
17.126 trillion. That's the budget for 2022. How do you think these numbers will impact, and how much of that is likely to flow into the capital market in 2022?
Yeah, it's a good question. Don't forget that anywhere in the world, government is the highest spender. But when government go in partnership with the private sector, they do more. And government budgeting roughly 17.12 trillion for budget for 2022. It's a good record, but the implementation pattern in Nigeria, or how they spend money in Nigeria, has not reflect more on the economy, on the market. Right. I'll tell you, in the last 5 years, this government have made a lot of rich budget. We have not seen much on the economy, because we are seeing the economy is still struggling. That's why we are seeing positive recovery. As GDP is coming, they are positive, but they are not really transferring to the entire economy. But because as investors want to see which sectors are suitable on that ground, if government has increased their capital expenditure by almost 28.2% from 4 trillion to about 5 something trillion for capital project, it gives you an insight that the construction sectors, both the housing, were expected to be activities in that sector. And also, when you know that when there is kind of construction, it creates multiple jobs. That means if they want to go into that capital project and they are doing infrastructure in Nigeria, that will create jobs for Nigerians. And that is the core work of CBN. CBN is to stabilize price stability and also to create jobs for the economy. This also supports CBN in creating jobs for what? For the economy. That's also, don't look at, I said earlier that if you look at what really drove the market last year, it's just this agriculture sector, telecom, and the manufacturing sector. That is that this is the area investors will be looking at in the new year, because from the budget now, we know that yes, government have made projects for infrastructure. That has given an insight. Yes, we know that the cost of servicing also, our debt is high. And also we're having deficit in the budget. That is that government is likely to borrow again. And if they want to borrow, they want to borrow on a high cost, because cost of serving the debt is already high. For me, government will look at how can they borrow at a lower cost. If government borrow at a lower cost, that means we might see more activity in the equity market, because if they are borrowing at a lower cost, it might not be interesting for others to go into bond or fixed income investment window. Right. And at the same time, we see that if some of the companies that are listed on the exchange are doing well, because if you jack up your interest rate, if you jack up the price of transportation in terms of removing subsidy, it's going to reflect on the general economy. There will be high cost of high cost of production that will affect some companies on the exchange. That their cost of production will eat into their profit. But there are some companies that can pass this cost to what? To consumers. Those companies are going to be targeting as what? As investors, because at the end of the day, if they pass their cost to consumers, and the consumers are buying that product, and the products are leaving the shelf, those companies will post positive results. And when there's positive earnings, it's going to drive price, because that positive earning also drive positive sentiment for those stocks. I see those ones impacting for those selected stocks where they have elastic demand for their product. But for me, investors should don't invest wisely for 2020, because I see that both the budget, and also don't forget that the Omicron was saying it's not over yet. And also we expect that because it's not over yet, government will also look more to the healthcare sector. Right. Then I'm going to inject money in that sector. That means companies in that sector also will see how government injecting money into the healthcare sector in 2020, 2021 has helped those companies to be active. That means going into 2022, that trend will remain, because we have Omicron that they're saying that it's coming up here. That means that sector also investors should look at. That means investors should look at the healthcare. They look at the way of agricultural sector, industrial, and some banking. Banking is essential, because in the economy, banking remains the engine room.
Talking about the banking sector, of course, Access Bank is one of the banks that is catching out. Of course, it's earnings season here. Let's look at the financial year for the Access Bank, which of course ended around 606.5 billion naira, and profit after tax of 421.89, and then you have the earnings per share of 3 naira 43 kobo. Now the question I'll be asking is, the take of, let's say, the benefit, or those who catch out of the market in 2020, of course, like you said earlier, the telecom sector. You also look at the other who plays in the food consumables, like Okomoya, like you talked about earlier. So one wonder, how did this bank arrive at these earnings?
If you look at Access Bank, I think Access Bank is one of the fastest growing, what we call it, the fugas. It's the one that, as to speak now, at the end of the 9 months, for the banks, Access has overtook what's called the Zenith Bank and the GTB in terms of gross earnings. But in terms of profitability level, Zenith Bank remains number 1 in the industry. But in terms of gross earnings, Access remains number 1. What does that tell you? It tells you that if a company or a bank is growing its top line, so that the possibility of growing the bottom line is high. That means it's catching into new market, because Access have launched out of Nigeria to other Africa countries. That means those countries have started bringing return for them. They will believe that going to the future in the next 2 years or 3 years, Access will start also growing the bottom line, because this bank has over the years kind of built capacity. You were paying little as dividend, kind of using the money to acquire banks. Now, after we have built capacity, next thing is for them to start consolidating that capacity. I believe that Access has the capacity to drive this price even above 20 naira, because
is that why you were seeing a bit of money throwing around here and there. When I say throw around, that doesn't mean they're losing money, but investing outside it shows. Because I remember that the CBN denied them buying over or investing in a Union Bank as well.
No, but the bank has no smarter from time. If you deny me getting access to Union Bank here, but the same institutional investor in Union Bank that has other investment, other banks after Nigeria, they went ahead and acquired those. That's why today, in most of these countries where they are, access is ranking number 4, number 3. So that means in the next 2 years, we see access blowing up. For me, what CBN did there, even they allowed them, but access, I'll tell you that they have put their feet on the solid ground to move forward. For that, investors that are thinking long, medium, even to trade, should look the way for access. Yeah.
Okay. All right. We'll take a break now. I think we need to go on break. But when we come back, of course, the next company we'll be talking about is the Vitaphone. But I'm interested in the Vitaphone and, of course, their growth trajectory or the journey so far and where the stock of the Vitaphone is headed in the new year, because I know a lot of people are have invested in that, given the fact that dividend is around 150 kobo. Yes. I think we need to take a break here. You're still watching the Business 24. Let's take a break now. When we come back, of course, we'll look at a closer look on the Vitaphone financial year. Glad to have you back now. Ambrose Omordion, Chief Research Officer, Investor, is still here with me, looking at some of the direction or sentiment that drove the equities market last year. And we're looking at some of the earnings report now. It's earnings season. We'll look at Access Bank earlier, but it's time to look at the Vitaphone. The company's turnover ended positive in 2021 with about 35.40 billion naira and profit after tax of 4.60 billion naira. That's much money for the leisure company, if I may refer to them as leisure company there. But Ambrose, let's look at this now. 1 naira 50 kobo dividend for investors. That looks good.
Yeah, you know, Vitaphone for me is one of the miracle stuff for investors for 2021. For those that attended the Invest Data program, that was December 2020, December 1420, we give them as a golden, one of the 10 golden stock to buy, and they made about 222% for just 1 year. And also, if you look at that Vitaphone, I'll tell you that Vitaphone has really done well. You know, their first quarter, second quarter, third quarter was in the up direction, and that also show on the chart we are going to discuss on this program. And if you look at Vitaphone paying a dividend of 1.50 kobo against 70 kobo. That is more than 100% growth worth in dividend payout. And also the price appreciation for the year is about 188% for 2021. It says that there is a lot of activity and return for design investors that position for this stock. Traders have cashed about almost 200% for the year, while investors that want to wait for dividend also going to get about 100%. For a company to grow their dividend from 70 kobo to 1, it tells that the numbers are also supported such a payout. For them to put about 368 kobo earning per share, and they are paying out around the 1, that means they are paying about 50% of their earnings as dividend, which is good anywhere in the world. But I want to quickly look at the chart. But there's one thing, equity investment, that people should have in mind, that when you are seeing a company growing its earnings on a quarterly basis, we call it when the earnings are trending up. Also, look at the volume of activities in that company. It's also looking up, and price is looking up. I will tell you, investor, that is the right time to be in that stock. You start looking at when there's change, there's all cost support level and the resistance level in equity investment using the chart. When you see a company breaking out its resistance level with a good volume, and you see price moving up, and you see volume moving up, you see also the earnings of the company is moving up. That is the place to be. You don't need to go and look for a institution to tell you that you need to be in that company. You need to understand that once earnings is trending up, price is trending up, volume, that means there's what we call momentum for that company. You need to take advantage of that and invest. If you look at this chart here, we're going to look at now. This is the chart of Vital Foam. This is the what we call the daily chart movement, or call it a daily time frame, or call it a daily chart, or you want to call it. If you look at this breakout here, this is for 2021. The first resistance was around for 2021 on a daily chart. If you come here, you see it's around 10 naira. When it touched that 10 naira, it pulled back. If find another support level here around 7 naira 30 something kobo before it break out on this level. When you look at where it break out, look at the volume that was there. The volume was a little up, but it continued that we have volume that supported this uptrend for Vital Foam. If you look at, let me just quickly draw this chart, this trend here. You understand what I'm saying here? It's an uptrend there, and whenever you see that the price action is above the trend line, tell that stock is bullish. But when you see that the price action is below the trend line, it's a bearish movement. So for Vital Foam,
when you say trend line, let me come in. When you say trend line, you're talking about the price movement.
No, I'm not trend line. Trend line is just to give you a direction where the stock is going. Where the price movement is price action. This candlestick you are seeing here is called the price action of Vital Foam. How it performs. You can see that it's an uptrend. But for you to have a clearer view, let's quickly go to what we call a weekly chart to make it easier for you. You can see this is the weekly chart for Vital Foam. You can see for 2009 to date, almost 10 years, the stock has remained below 4 naira until it break out in 2021 breakout in 2020 October, gradually that 4 naira before it continues an uptrend. You can see the trend line again looking up positively, tell that this stock has a positive momentum which has supported the price up. And the good thing is that look at the volume. When you start seeing this movement, you can see this bar here, the green one tells that this is the volume of transaction in the stock. This is what we call a positive momentum for them. And also if you look at the MACD down here, you can see that MACD also crossed up the red one from down. You see it went up through this period at uptrend, and that is why this stock was able to deliver about almost I say it again, 188% for the year. But let's go to a monthly chart that will make it clearer for you to understand. Fine, you can see here, this chart make it clearer for you to see that this monthly chart shows that the Vital Foam in terms of price performance has been strong for throughout the year 2021. You can see this uptrend here. For me, Vital Foam is a good stock. So even going into the new year, if we see the first quarter, because actually December is the end of the first quarter, that means in this January, we were expecting their first quarter for the year 2021. For 2022, I mean, that is good for Vital Foam. And their payment days around the March. For me, if you are really an income investor or a pensioner, you can still look the worth. But for traders like us, we don't need to wait for the dividend. We have made money. If you have made about 188 in a year, what are you waiting for dividend percent growth of about 100? You can go out by board. Those that are income investor, pensioners can still wait for dividend, because we expect that in the new year, we're going to see this stock big way, because what supported the stock in the previous year was because of the issue of health challenge. Because Vital Foam and the health industry, they are kind of that are connected, because they provide most of the bed, and also Vitafoam also diversify into producing, the interior for cars. That means this company has a lot of business they are doing now that's going to support their bottom line.
So fundamentally,
as an investor,
fundamentally,
it's a very good one. But your technical to tell you the right price to buy and sell. I can see that the stock is still trending up. It's above the trend line. This is a good sign, and you can see that even the MACD is also looking up for me. It supports a good thing for Vitafoam.
But let's wind it up now. We have less than 2 minutes to wrap it up on the show. Well, a lot of investors are looking up to holding or retaining or sustaining the value for their money, because it is expected that some of these policies, by the time the government start implementing them, for instance, subsidy removal, naira devaluation, of course, is expected to happen this year. Forex flotation, that is to find its level by way of demand and supply, is also expected to happen this year. So a lot of investors are perhaps, expecting that the value of the naira would drop further. So they are looking for a way to hold value for their naira. So where do you think investors can, put their money?
Well, like I said earlier, that design investor that has knowledge, they know what to do at this point. For me, one, companies that have done backward integration will not be affected by naira devaluation. Right. If a company have done backward integration, that means they are sourcing the raw material within the economy. This is the company we are looking at as an investor, because if with the further valuation, those companies will not be spending much. So if you are importing raw material, that means the devaluation will also eat up your profit at the end of the day. That is one. If you want also to hedge against inflation, look for those companies that are, demand of their product is inelastic, and also you can also go for real estate investment. It's like how to hedge against inflation. Look for stocks that has that capacity that even they can pass their costs to investors, to consumers, and they make money, and that earnings support their price. And in real estate, therefore, those that you want to play, say, for duration, look for those companies that have done backward integration, that are not importing raw materials. Those ones, their price will be stable, because the cost of production will still remain
very low,
because they are not importing. Those that are importing raw materials, because of devaluation, it's going to be much, and then that will eat up their profit at the end of the day.
I think we need to leave it there. Ambrose Omordion, Chief Research Officer, Invest Data Consulting Limited. Thank you for coming on the show.
Thanks for having me.
Yeah. Well, this is a good time to call it a day. Many thanks for watching. We'll be back again. Ambrose, of course, will be here with us on Wednesday to look at, for those of you who are looking up for price movement in stocks and shares. Well, it's a good time to join us then on Wednesday. But for now, I am Frank Omalape. Bye-bye for now.